Hello, everyone. I think we are about to start because it's 12:30. So, welcome to today's market outlook. We've been doing these 3 times a week in recent weeks, and I think it's been interesting because we have had increased market volatility. Let me just put up the risk warning before we look at this. So, what this is, we take a quick look at the major markets. So, we'll look at stock market indices, the pound and the euro, gold and oil, just to see what's been going on over the last few days and some of the levels to look out for in the days ahead. It's been another interesting week so far. We've had ongoing volatility in stock markets, although I think we did see on Monday the S&P, the US broader index, slipped to a new low for the down move, so hit a 5-month plus low. However, in the last couple of days, we have seen stock markets bounce back. And of course, this Friday we've got US non-farm payrolls, so they're due out 1:30 Friday lunchtime. So Friday's webinar will start at 1:15. So we'll do a quick preview what the market is expecting, what the markets look like ahead of this announcement. Actually, no, it's going to be, it's 12:30, isn't it? Because the US clocks haven't gone back. Let me figure out my times properly later in the week. So I think they'll come out 12:30 this week, but I'll double check that. And as long as you're subscribed to the channel, you'll get the notification when we go live. So we'll do a preview, what's going on, levels to look at, and see how the market reacts when the numbers come out. But ahead of that, we've still got a lot to look at anyway. So let's get started. So these sessions normally last about 15, 20 minutes. I thought we'd start with FX, first of all, currency markets, because it has been another few days of strength for the US dollar. Let's look at the pound US dollar here. So let's just flip that out and get rid of that for a second. What's interesting is the moves we've seen over the last couple of days. So yesterday, pound US dollar got as low as 127. And, don't forget, it was, just a couple of weeks ago, the market was trading at 132.50. So we've seen a 550-point decline in pound US dollar over the last couple of weeks. What is interesting is the strength we're seeing today. Now, it's early days and it's only one day, but we are pretty much within spitting distance of those August lows. I think if you were trading it or watching it during August, it did feel in the first couple of weeks of August that the pound just went down every day. But we did see the buyers come back in sort of 126.60, I think, with the August lows. It's been as low yesterday, briefly below 127. So basically, in a nutshell, if the pound is going to turn around anywhere, then this is the place. So, I don't think we're going to see just a handbrake turn from here and we start clawing back those 500 points, those 5 cents lost over the last couple of weeks or so. But maybe we'll start seeing a bit more to and fro down here and buyers willing to step in on weakness. Looking at the RSI, looking at the oscillator down here, we've got pretty oversold. This is the most oversold it's been since those August lows. So this is a 10-day RSI. So again, if we are going to see strength for the pound coming back, then our oscillator is still backing that up. Let's just have a look at the hourlies though, because I think, given the size of the decline that we've seen, let's just pick up on this trend from those levels way back up there. Here we go. So it looks like that. So there's our trend off those 132.50-ish highs. We've still got resistance coming in on that trend line around about 128. In the last hour, I know what I need to do. I need to make my screen 200%. So the scale's a bit clearer. Here we go. So 128 is where that trend line is coming in. So that's, I think, that the first level that needs to be broken if we are going to see some sort of dent put in this downtrend. So you could argue at the moment the strength that we've seen today, and we've seen a rally of about 80 points today for pound US dollar, is just another opportunity to sell short while this 128.50 level holds. But it's definitely interesting down here, the pound, because it has been so weak, and we are back to, I'm a big fan at looking at these major levels. These are the 2018 lows from 126.50 through to 127. So if it's going to start turning around anywhere, then we are here. So this is an interesting one to watch over the next couple of days. Given the fact we've got the payrolls on Friday, we could well see a quiet couple of days. Tomorrow, 12 o'clock tomorrow UK time, is the latest Bank of England interest rate decision. No changes expected to UK interest rates, but we get the inflation report as well, so we could well see some volatility for the pound this time tomorrow off that. So it's a really interesting market to watch the next couple of days because we're back to these lows. Euro dollar, it's a similar sort of story. Let's flip this over to a daily. So the euro, again in the summer for the euro, you know, we had that run of dollar strength that started from May last year. 2017 was the worst year for the US dollar since, from memory, 2003. So the US dollar really under pressure all last year, and then in May this year it staged this comeback. April, May this year it staged this comeback, and it continued into the summer. So we saw the euro pushed as low as 113. So these were the lows for the euro in the summer. It did bounce back to 118. So we saw a 500-point rally into September. But we're back here again now. You can see we're trading at, what, 113.30, just above that for euro dollar. So again, like the pound, if we are going to see the euro start turning things around, then we're here now. Saying that, it's still weak. You know, we're looking at the daily chart here. You can see this is a market that, as of today, did push below yesterday's lows, but you know, the big level to watch is just 30 points, sorry, below where we are now. And there we have, let's pick up, if we pick up on that, on our trend for euro dollar, you know, we've got the trend from the highs up here. There we go, looking something like that. So coming in around about 114, the highs from the 26th of October, 114.20. So 114.20 is the level that needs to break on the upside for euro dollar if it's going to try and break out of this trend. So pound and the euro both down to what were major lows from the summer. So, you know, so one way of looking at this, like I was saying, we should, if it's going to turn around anywhere, then we're here. However, if these levels break, you would expect there to be, you know, a lot of stops below them and a lot of people wrong if these levels break. So you would expect it to start off a much sharper sell-off. So I think these two markets, really interesting ones to watch over the next couple of days. Let's take a look at stock markets because we've seen something of a bounce back. Let's start off with the S&P 500. So the broader US stock market. Let's take a look at the daily chart. Let's just pull that across. So here's the decline that we've seen since the beginning of October. And of course, you know, the market's just about squeezed out to fresh all-time highs late September, beginning of October, and have just fallen off a cliff through much of October. But you can see for the S&P, there's the move to fresh lows on Monday. So we were looking at, when we did the live session on Monday, you know, I was saying we should expect more volatility from markets. We definitely got it, but it has so far put together, you know, 2 days of back-to-back gains so far. Anyway, you know, the market opens in just under an hour is the official market open, but of course it's a 24-hour market with us. So it's an encouraging recovery, you know, but let's not get too carried away just yet, because on the way down we have seen the market snap back quite sharply, only to get clobbered over the next couple of days. So I think we should still expect plenty more volatility in the days to come, particularly given the fact we've got the payrolls on Friday. I picked up on this bullish divergence earlier this week. There was a couple of questions about that. What it is, so an RSI, this RSI down here is a relative strength index. So it's a traditional overbought, oversold indicator. So when it goes above 70%, traditionally the market is said to be overbought. It's maybe gone up too far, too fast, and is due a correction. When it goes below 30%, it's said to be oversold. It's gone down too far, too fast, and is due a bounce. But in strong trending markets, these things can stay overbought or oversold for quite some time. And that has been the case with this RSI. You know, it first went oversold about here, and you can see the market just continued to fall off a cliff. But what we have is this idea of bullish divergence, where the market has slipped to fresh lows, but the RSI is making higher lows. So it can be a suggestion that maybe the move is getting a little bit overdone in the short term. So maybe the sell-off has gone a bit too far. That has been backed up with what we've seen the markets doing. So let's just have a quick look on the S&P, some of the levels to watch going into this afternoon. You know, if we picked up on maybe the trend off those highs from up here, you know, it looks, there we go, looks something like that. So as we speak, you know, we are, for the first time, pretty much, isn't it? For the first time in the last month nearly, we are showing signs of breaking out of that downtrend. So we are in pre-market trading at the moment. Let's see if it can hang on to it this afternoon. The next immediate obstacle for this market is just above where we are now. So the highs from the 25th of October. So late on in the session, around about 27.25. So going into this afternoon, I think that's a level to watch. If you still thought these markets are going to be under pressure, and that's the side of the fence I'd be sitting on at the moment, I'd be looking for maybe a bit of weakness this afternoon and maybe an opportunity to sell short with stops somewhere above this level. But I think we could be in for another interesting session this afternoon. Let's take a look at the Dow. If we looked at the similar sort of thing on the Dow, again, if we pick up on the trend from up here somewhere, hang on, I've managed to get rid of that. Somewhere up here. Let's take it off these highs here. Oh, I just want to draw it. I think we're seeing the similar sort of thing happening for the Dow. And again, I think big levels to watch, pretty much where we are now, from 25,100 through to 25,400. That's been a real barrier. And the DAX, the German DAX, making similar sort of moves. I think in the very short term, 11,500 could be a level to watch for the DAX. It was the old lows from back here, mid-October. And it's the highs, pretty much the highs so far today. Hasn't quite got as high as that. But so stock market's bumping up near old resistance, and it's sort of break or turn down time again, I think, for these markets. And just the last one on stock markets, the FTSE. So pound weakness definitely helps the FTSE. You know, we've talked about this a bit in recent months. The FTSE is something of an odd index because so many of the constituent companies from the FTSE derive their earnings from overseas. So a weaker pound is definitely good for the FTSE. So with the pound getting clobbered so much over the last couple of weeks, that has definitely helped this FTSE recovery. You know, so the FTSE's pushed back to levels not seen since the 10th of October. So, for me, I'll be watching the US markets to see, is this really a valid break? Okay, so plenty to watch, I think, in stock markets this afternoon to see if we can follow through with this trend line break. Personally, I don't quite believe it just yet, and I think the risk is that maybe we'll see the sellers come back in. We'll look at oil, then we'll look at gold. Gold has got interesting again, so we'll come back to that. We're looking at oil this week, just talking about this big trend that's been in place since June. The market has come off since pushing up to 77 in early October. For me, we've still got higher lows and higher highs, just about. The big level runs from sort of 63.5-ish through to 64. It did blip. I did actually buy this yesterday because it blipped lower, but it didn't really follow through. So all over the past week or so, we've seen oil hold around about 65.70. It did blip down to about 65.40 yesterday, but recovered pretty quickly. You know, so it's looking like a false break at the moment. It's maybe a little bit boring, oil, but later on today, 3:30, we do have the oil inventories come out. So the latest, the weekly, how much oil basically is stockpiled in the US. So we normally see a bit of volatility for the oil price. But for me, while it stays above this whole sort of 63.5 to 65 area, that trend is still up. And finally, gold. I think the weakness we're seeing in gold is an interesting one. There's my arrow. I'm going to delete that, and I'll be back there on Friday. So we'd seen this breakout of the downtrends for gold, and the market had pushed higher. And I said, where it will be interesting is if the price starts to sell off after this breakout, where do the buyers come back in? And I think we're seeing that at the moment. So the price about a week ago pushed as high as 12.43, currently trading at 12.17.5. And I think what's going to be interesting when the strength comes back in. So if we drift back to 1200, do we see the buyers come back in? Because for now, I think the move we've seen in gold does suggest we are seeing, finally maybe, something of a recovery for the price of gold. So for me, that is the trend that I'm watching at the moment, following the breakout, following the push to a 3-month high or so. Where do the buyers start coming back in? So it'll be an interesting one to pick up on Friday ahead of those payrolls numbers. So we'll start wrapping things up there. So I think there's still lots to watch, even though payrolls are out on Friday. The pound, because we are back to these August lows, and stock markets, because the S&P at least looks like it's having a go at breaking out of its downtrend. But let's see how it copes with these old highs from back here. So like I say, I still think there's a risk that maybe we'll see some sellers. And then when it comes to individual stocks, maybe let's just have a quick look at at Facebook maybe, because they had results last night. I think they did say that that maybe they've hit maturity in terms of developed markets, so they're still seeing growth, but clearly not at the same sort of pace as before. Let's just have a quick look at the dailies on Facebook. They were very volatile, I think, in after hours trading last night, or pretty volatile. They were up 5%, down 5%, a bit all over the place. But we have seen them drop from clearly, $220 a share in July to as low as 140 recently. So that could be an interesting one to watch this afternoon. They're looking really oversold on the RSI, but like I say, that doesn't mean anything really. They went oversold down here and have carried on falling. But maybe Facebook, for those of you who like individual stocks, is an interesting one to see this afternoon. Do we see some sort of recovery after last night's earnings? It did have a strongish day yesterday. Let's see what happens. But for bigger markets, the pound and stock markets are the ones to watch. We will wrap things up there as usual. To open an account, open a demo account, see what markets we offer. Go to Capital.com, you can see all that. Any questions, feel free to drop me an email, davidjones at Capital.com. We do lots of stuff on our YouTube channel. If you've not subscribed, if you subscribe to our YouTube channel, there's always market commentary. I think cryptocurrencies went up today, asking the question, have cryptocurrencies died due to the lack of volatility that we're seeing? Is the party over for crypto? So you can watch that video. And on Twitter, you can follow me on Twitter at Jones the Markets for various updates throughout the day. But we'll wrap things up there. Thanks for coming along. We'll do it all again on Friday for the payrolls and see if stock markets have managed to build on this recovery.